All right, good morning. Today is Tuesday, June 25th, 2019. This is the Stock Market Today presented to you by Chaikin Analytics. Gives our view of where the market's going today and what's happening. You may be able to tell if you're a regular viewer that this is not Dan Russo, this is Nick Webb. I'm in for Dan Russo while he's on his honeymoon. So if you see that Twitter handle down there of @DanRusso_CMT, well, go on, make sure you follow him so you can follow all of his honeymoon pictures that are coming across his Twitter feed right now. But when he returns, he actually does provide a lot of great insight into the stock market. So what's going on? Yesterday was kind of a dull day. It was sort of resistance holding at 29.50 for the most part. Energy, consumer discretionary, and healthcare were the losers, which actually seems like they were giving back some of their big gains from the prior week. Materials and consumer staples, on the other hand, were exactly the opposite. They actually had a very good day and hadn't had as good a week the prior week. So it's sort of a change in positions. Just one note is money flow continues to be weak. That's something to keep an eye on because it's not nearly as serious as it was in Q4 of last year. But you can see when there's a little dip in money flow, there often is a dip in the market. So keep your eye on that as we go forward. It's pretty close to flat right now, but as you know, Chaikin Money Flow monitors institutional support of a equity or an index, and you can see it's sort of flagging right now. So key points, as we already said, the market ends mostly flat. You can see that reflected over there in the results of the major indices. Dow barely moved up, S&P barely moved down, NASDAQ was absolutely unchanged. You don't see that very often. The one exception is small caps continue to underperform. So I kind of feel like there's a mean reversion at some point because they've been underperforming for quite some time. And at some point, there's going to be some built-in energy in small caps. But for right now, they continue to underperform their large cap brethren by a pretty substantial margin. And you can see they were down over a percentage point yesterday. The big news hitting the market right now is that AbbVie is closing up on their merger with Allergan. And so there are some pretty intense moves in the pre-market. And in general, there's several major new pieces of news that'll come out over the next 2 weeks. One is the upcoming earnings season. I think everybody's a little on pins and needles about that, as it will be the second quarter in a row of negative earnings growth year over year for S&P 500 companies. And the big news over the weekend was that it is now reported by FactSet that Q3 will also be, or is looking to be, negative earnings growth. So that is 3 quarters in a row if that comes to pass. So needless to say, earnings is causing some consternation. The trade wars should see some movement this week. During the G20 meeting, Trump and Xi will sit down and hopefully hammer out a better arrangement than what they've got right now, which is tit for tat, tariffs, and all kinds of just nasty stuff. Chinese are particularly upset about the addition of 5 additional companies in their sort of blacklist category. Finally, next week you'll get another round of employment data, starting with Wednesday, the early look from ADP, and then the real employment report on Friday. Last month's employment report was not a particularly good one. As a matter of fact, it was very low. So there will be all kinds of examination of this one. And in particular, they're going to look at wage data, because if wage data continues to be benign, then that really will cause the Fed reason for a cut coming up. The other thing that is just staggering right now, or sticking out, is that gold is at a 6-year high. And if you take a look at the chart, which we will later on, it is just a chart to behold. Futures are, again, sort of pretty flat. So nothing to report there. Stock of the day is Apple Hospitality REIT. This is a REIT that has a 7.5% dividend. So for those of you that really like income, this may be for you. Let's walk through what we feel, or the way that Chaikin sort of reads these charts. So if you look at the top right or top left-hand corner, you can see that we've rated this neutral plus. In Chaikinese, that means that that is a stock that we would view as bullish, and you can sort of see from the power gauge constituents, it's got a lot going for it in all the direction. But since it's unable to break its long-term trend, it's actually trading below the long-term trend. Rather than rate it bullish, we rate it neutral with a positive upswing. And this basically tends to mean, hey, it's a good stock, but there's increased risk in owning it. And so you look down here, and that's the trend. You can see, by and large, we've been pretty bullish on this stock since January. However, the relative strength has not paid off the last few months while the market's been rocketing. And again, that's pretty much consistent with high dividend stocks. They've been treading water. Money flow really doesn't have any direction. So if you think about it, Chaikin likes the stock. Relative strength, the market does not particularly like the stock. And money flow, which is the smart money, really hasn't formed an opinion. So that's the story with Apple. So where have the sectors been going? You can see technology is now on top over the last 5 days, with energy a close second. Obviously, with oil prices, that's been a real trigger for energy stocks. And down at the bottom, you can see real estate, and we just talked about all the reasons why. They've been lagging the market, and they continue to lag the market. Now, that will change at some point, because as interest rates go down, long-term rate, the 10-year treasuries at 2%, people will start looking for yield. And utilities, for instance, and real estate REITs very well might be where they end up. Now, the industry focus, this is, we sort of cycle through all the industries that are in Chaikin Analytics. You can see we view the aerospace and defense services as a real positive. You can see 16 are rated bullish or very bullish, and only 2 are rated bearish. So that's got a ratio of about 8-to-1, which is, really pretty bullish rated for the whole industry. And you can see it has absolutely outperformed the S&P 500 by a whopping 13%. So this is number 2 of 21 subsectors. A lot of great companies in here. Here are some typical ones. Arconic, which was a spinoff from Alcoa. You've got Wesco Air, and then Astronics. Well, given that we have now had our 5th branch of the Defense Department, the Space Force, I figured what better way to celebrate that than look at Astronics. And so again, here's another view of what we see in Chaikin Analytics. Very bullish stock, great financials, earnings, technicals, and experts. You can see we've been bullish on it since April, and the stock has definitely rewarded that viewpoint. So again, going through this, relative strength is pretty solid. So this is a stock the market likes in addition to Chaikin Analytics. But Chaikin Money Flow has been sort of and sort of view them as the Russian judge. So you've got 2 thumbs up and the Russian judge with the negative rating. In terms of what was moving yesterday, well, for those of you that play video games all day in your basement for the last month, yesterday was your day, because 2 of the big movers were Electronic Arts and Activision with 3.85 and 2.7 respectively. The other one of note is Newmont Mining, and again, that's a move in relation to gold prices going up. So that one has been really driving the market, gold prices for mining companies. So just a call out to get chaikinanalytics.com. get, that helps you follow along with this presentation. Bye-bye.
The point of on trend is to keep you on the right side of the trend. Mostly dealing with stocks and ETFs, I'm going to point out bullish setups on stocks and ETFs that are in uptrends. I'm also going to look at some downtrends, but those are designed also to tell you which stocks and ETFs to stay away from. The main point is to stay on the right side of the trend, the uptrend.
This is a brief tutorial on using stochastics. Big word, but wonderfully simple. The idea behind stochastics indicator is that as the price moves up, the close tends to stay close to the highs, or the price action throughout the day tends to stay close to the highs. And as the trend weakens, it has trouble staying near the highs. The stochastics will point this out. And the reverse is true at the lows. So as price is declining, all of a sudden it stops always closing near the lows. So not to get confused with %D, %K, %R, that type of thing, Henry Ford started with the Model A and went B, C, D, E, F, G, all the way through to T until he came out with the Model T Success. And so when George Lane and his colleagues were doing that for stochastics, they kept working their way through, and they did the same thing. They used %A, %B, %D to try and find a rhythm that worked out nicely. So what stochastics does is it takes a range over the last few days. In this case, a 5-period stochastics would say that from this point to this point is 100%, and price closed at 82%. And then that would be %K, and then %D would be a moving average of that. And it's important to remember on stochastics, according to George Lane, there is only one valid signal, and that is the divergence on %D. So you're looking for the divergence on moving average, and I'll show you that on some real live examples. So here's Apple, and I've got these stochastics set up slightly different. So this is a fast stochastic, this is a slow stochastic, and you can see that it's much smoother. It's got these whipsaws taken out, and that smoothing function is what %D is changing for us. And then the full stochastics here, I've changed the period to 14 instead of a 5-period stochastic, just to show you that it gives you smoother signals, and so it's a little easier to trade with a 14 period, and that would be the default at StockCharts. But depending on how aggressive you want to be, you might find that there's a better way to trade. So all of these signals are important, but what the big clue you're looking for here is this positive divergence where things are improving while the momentum is coming down, and you're starting to see the stock whipping around at the bottom here, usually a sign that something's getting a little more volatile and you might get a chance. So, a nice trade like this would be a great move of $30 or something like that, and it would have got you in relatively early. Here is USO, and what we want to show you on this particular area is you can see how the price is actually struggling to make any moves higher. And even though %K keeps banging on the top here, the %D, which is the moving average, this purple area, is moving down and making a lower high here. And it's that lower high that is our divergent clue that we want to be aware of. And then that's going to give us our sell signal. And in this case, we've got double divergence with another lower high way over here. And that is a real clear signal that George Lane likes to talk about. When you get those, it's a very valuable signal. So you're looking for the divergence on the moving average. And again, in this case, I've set up all three as 5 period moving average, but our default is 14, so you could set them up whatever way you'd like. And the way you do that is just select them from the drop down menu in here, and then pick the time period that you want.